Sheng Siong is a familiar name to most of us. Many of you likely shop at their supermarkets for your daily needs or enjoy watching the popular Sheng Siong show every Saturday evening on MediaCorp Channel 8. But have you ever considered Sheng Siong as an investment? In this video, I will be covering key aspects about the company, including its business operations, financial performance, debt profile, and dividend payout to shareholders over the last 5 years. I will also be highlighting some important price levels I have identified through my technical analysis of the company's share price movements on a weekly chart. Let's go. A quick introduction about Sheng Siong before we look at its financial figures. Established in 1985 and listed on the main board of the Singapore Exchange in August 2011, today, Sheng Siong Group is one of Singapore's largest supermarket chains with 73 stores scattered across the different neighborhood areas in the country. Its stores offer a wide assortment of live, fresh, and chilled produce such as seafood, meat, fruits and vegetables to packaged, frozen, processed, as well as preserved food products, along with general merchandise, including toiletries and essential household products. Sheng Siong has also developed a selection of house brands to offer its customers quality alternatives to national brands at substantial discounts. Currently, they have a catalog of over 1,600 products under 24 house brands. Apart from Singapore, they have also expanded to Kunming in China since 2017, where they now have 5 stores, with one more on the horizon in 2024. In case you are wondering how much the operations in China contributed to Sheng Siong's overall revenue, for the financial year 2023, it contributed about 2.4%. Sheng Siong has a financial year end on 31st December. Let us now take a look at its revenue and net profit recorded over the last 5 years. Between 2019 and 2023, there are three things I want to highlight here. The big jump in revenue and net profit in 2020 was mainly due to elevated demand arising from COVID 19, particularly during the circuit breaker period between April and June, where people stocked up their households with necessities. In 2021 and 2022, Sheng Siong's revenue and net profit saw year on year declines in successive years as safe management measures were gradually lifted and normalcy resumes. And finally, the improvement in revenue and net profit in 2023 was primarily driven by 6 new stores, which contributed a 2.5% year on year increase to Sheng Siong's total sales. Looking at Sheng Siong's gross and net profit margins over the last 5 years, one of the things that caught my eye was the gradual improvement in the gross profit margin over the last 5 year period, where it improved from 26.9% in 2019 to a high of 30% in 2023. In fact, its gross profit margin of 30% in 2023 was the highest in 5 years. Its net profit margin have more or less remained at around 10% in the last 4 out of 5 years. Apart from looking at the company's financial performance, another area I focus on is its debt profile, where my preference is towards company with little or no debt. In that regard, over the last 5 years, Sheng Siong has very little borrowings and are in a net cash position every year. In fact, its net cash position have improved every single year over the last 5 years, from 76.4 million Singapore dollars in 2019 to a high of 324.4 million Singapore dollars in 2023. The management of Sheng Siong declares a dividend to the shareholders on a half-yearly basis. Two things to highlight here. First, because of a huge jump in its financial performance in 2020, its dividend payout also went up in tandem. Second, if you notice, over the last 5 years, it has maintained a dividend payout ratio of about 70%. Hence, moving forward, if Sheng Siong can grow on its financial results, its dividend payout should continue to see an increase. Here is Sheng Siong's share price movement since 2020 on a weekly time frame. As you can see, its share price has largely moved in the range of between a low of $1.47 and a high of $1.64. I have also noted down the dividend yields based on the payout of 6.25 Singapore cents in the financial year 2023. To round up today's discussion, one of the things I like about Sheng Siong is that it has an easy to understand business in that it operates a supermarket chain in the various heartland areas in Singapore. Also, the business in which it is in is a defensive one, meaning regardless of the economic condition, its catalog of products will remain in demand. In terms of its financial performances between 2019 and 2023, it has largely been stable, apart from a big jump in 2020 due to the COVID-19 pandemic, followed by a normalization in demand in the 2 years after, as normalcy gradually returns. The same can also be said for its dividend payout, where it has recorded a year on year growth every single year over the last 5 years, except for the year 2021, as it came off a high base the previous year. Finally, Sheng Siong also has minimal borrowings and is in a net cash position throughout the entire 5 year period I have looked at. With that, I have come to the end of my presentation on the Singapore listed supermarket chain Sheng Siong. I hope it has given you a good understanding about the company. If you find the presentation useful, I would greatly appreciate it if you can give this video a like and consider subscribing to this channel so you will not miss out on any videos I will be posting in the future. Thank you for watching, and I look forward to talking to you again in the next video.